I cannot tell you the number of people that reach out to me and asking, Mike, how much do I need to really get started trading the future markets? I'm burnt out of my job. I want to find something different that I can get into. Just kind of stepping their way into something in which they can make an income, whether it's part time or full time. Lots of them are looking for ways to, really step out from their full time job and become their own employer or own boss. And trading futures is a great way to do so. And you can do it with having limited fund accounts. Okay, meaning let's say you have $1,000 to start with, right? That's 1,000 bucks, and you want to, put into your brokerage account and start trading futures. Let me say this right now. Highly recommend starting off trading the micros for any beginner out there. Micro futures is where it is at for someone that is looking to grow a small account. Is it doable? Yes, it is. Okay. I know it's probably one of the most heavy hitting topics in a sense, but when anything that surrounds a dollar amount or a how to trade with, small amounts of money. Okay. So we're talking about $1,000. Not a lot of money for some people. It may be. But I'm going to say this right too as well. Do not take your car note money, your mortgage money, your grocery money, your utility bill money, your baby's food money, formula money, or the food that you put on the table. That money that you pay your bills with each and every month. This should be savings that you are saving up to put aside outside of your savings. Okay, to be able to trade with. So let's say you start off with $1,000. Micros, please do yourself the biggest favor and start that way. Market structure is the essential key to understanding and grasping the market as far as which way to actually trade, getting the direction right. Now, the strategy consists of simply just supply and demand. Okay, you may be asking what's supply and demand for anyone out there that's new. You're looking for areas in the market where there's aggressive buying and selling, but we want to get the market direction correct and move with the higher base chart in most times. I'm not saying that you can't counter trend trade, but please, if you're a beginner trader, do not start off counter trend trading against the market direction overall, meaning whatever's going on a higher base chart, do not start trading against it on a lower base chart. Trade in sync with the higher base and lower base combined together. It's going to give you more confluence. Now, let's say you're someone that has $1,000, okay? Now, you're not going to turn that and flip that into $5,000 by the end of the week unless you have, a lot of luck. Now, you can take that $1,000 and grow it to $3,000 by simply, looking to possibly make $100 a day. Okay, but on $1,000, that means you're leveraging 10% of your account. Okay, so it's not a lot, and I would say 10% should be the max. I personally would say stick around maybe 5%, somewhere around there. So basically, you're looking somewhere between gaining 50 to 60 bucks a day. You can still grow your account, but let's say you want to go 10% and you want to take $1,000 and at least try to grow it growth wise on $100 a day. So by the first week, you just made $500. Okay, scalping for $100 a day, trading the Nasdaq futures, for example, it's pretty easy to do. Okay, if you could capture, let's say, 20 points in the market, right? So we'll just simply do some quick math right quick. Let's do this right here. So let's say we are going for 20 points, right? Again, I've shown this before. Each point is 4 ticks in a point. That's 80 ticks times 0.5, which is the tick value for the NASDAQ, okay? Micros, okay? Micro futures. That's going to be $40 a contract, right? So that's going to make $40 for every contract you trade. So let's say you trade a minimum of 3 contracts, okay? Or a maximum of 3 contracts. That's going to give you $120, that you can actually make on the day. So somewhere between, that 100 and 120, you can build your account up and come out where you can grow that account from 1,000 and make or grow it, to $3,000. Basically, having a growth curve of pretty much capitalizing on $2,000 added on to the $1,000 you put into the market, okay, or into your account, I should say. So not into the market, into your account. Okay, you don't want to leverage the full $1,000. You want to only leverage a certain percentage or amount, because that way, in the event you take a losing trade or you take a break-even trade minus a few ticks, you should be able to get back into the business of the next day. Looking to make your small loss and make some gains. That's the way to do it. Okay, so it is definitely doable to build or take $1,000 account and grow it from 1,000 to 3,000. So you're are going to be earning an additional earning $2,000 on that $1,000 that you deposit into your account. Now let's talk about how can you do that. All right, How do we do that in 2025? Let's talk about it. The simple way of how I actually trade is just using a higher base chart, trying to figure out the overall direction of the market, okay, and definitely identifying, supply and demand zones. And I need to see when I'm trading a breaker structure. I talk about this all the time. If we look at structure in reference to yesterday's trading session into today's session, well, we can see the market was making higher highs and higher lows. Towards the end, you can see, I'm gonna say towards the end, about midday, we made this low here, followed up by a lower high. Okay, all right, and then we started breaking structure lower. So the market shifted from a bullish standpoint to a bearish standpoint back to the downside. Now, it left behind this beautiful area of supply resting right here. Why is it a nice area of supply? Well, you got to look at it this way. We made I'm going to draw it with arrows right quick so you can see it with your eyes. A low, a lower high, where it didn't take out this high right here, followed up, where we broke down and made a new low, lower high, and then a new low, right? So within this swing right here to the downside, there was another swing, right here. There was a swing coming down, pull back, and where it broke structure. There's aggressive selling coming to the downside right here, okay? Aggressive selling that broke below this low right here, okay, within this swing. So this is a minor area of structures tucked back in this larger swing right here, all right? So you can have minor areas of structures or smaller areas of zones or structure within a larger swing, okay? So let's stop right there. Now, there's a difference of a zone being low probability versus high probability. This is the high probability zone. Again, this is on the NASDAQ, the E-mini NASDAQ, but just think about it in reference to if it was the same thing, on the micro futures, okay? Meaning the NASDAQ micro futures, or, maybe you trade the MES, which is the micro S&P 500, or the ES futures, okay? Same thing, you're going to just look for the same kind of setups, but we are bearish to the downside. So that, that basically is letting us know that because we're bearish, we should be looking for what? Pullbacks to key areas of supply on our, on our higher base chart first, okay? So swinging lower, making breaks of structures below. The breaker structure is important because that's what's going to help me identify, the swing movements within structure, right? Low, lower, high. I primarily do not like just taking trades where you just have like a demand or just a supply area, okay? I want to have a breaker structure with a supply, okay? Or if I'm going short, or a breaker structure with a demand if I'm going long. All right, and there is a difference, okay? So within this area right here, the swing, there are minor structural breaks to the downside. And within this swing here to the downside, okay, that's a push down, low, lower, high, breaking structure. Below this area here, there's an aggressive area of selling right here. So that's a supply zone that's on the inside of a zone, a smaller minor structure break where there was a supply area, okay? So when the market comes, I would, at this point, once I see this, okay, so not only we did take structure out right here, but we took it out right here. So we broke a low here and below this area here with this move to the downside right here. So this is an aggressive area of selling right here, all right? So when the market retraces back to it, which I would be expecting or looking for it to do, I'm gonna go ahead and mark it up once I see it breaking these areas or these lows right here. Aggressive selling to the downside. It's high probability because there's an imbalance or gap attached to it. The imbalance, all right? If you don't know what the imbalance or when I say or reference imbalance or gap, please watch some of the videos here on the channel. I talk about it a lot. But this and it's back to the zone, okay? So the imbalance right back to the zone we've actually drawn. Sometimes they'll go deeper into the zone, and it could be something on the inside they may be trying to target. But when the market starts to close or start to close with candles inside the zone, be very wary of that because they may be trying to break through it. I like to see where they come to the zone and then they react right at the zone when they get to it. But I'm not taking my trade off of the higher base chart. I'm gonna mark up my higher base zone first. The last part of the strategy, which I talk about a lot here in this video, I mean not this video, but in this video, yeah, but on the channel, is to where we're looking for, and we scale down to a lower base chart. So I trade 120 for my higher base, and then a 24 was my entry chart for my lower base. So at this point, once I figured out the direction of the market, okay, I'm trading off, or I'm gonna mark up a zone off of a breaker structure. In this case here, we got a minor breaker structure where it broke below this area and this area here. So I'm going to look for a pullback to a key area where the market can come back to where we have a high probability zone. Mark it up on the higher base chart. Then I'm just going to go down to my lower base chart, guys, like I've talked about in a lot of videos, looking for a smaller zone on the inside of that zone. And I'm going to show you an example right now what I'm talking about, because when it got right here, to be honest with you, it didn't, let me make sure this is drawn like to the tick. There was like a 1 tick gap. It's hard to see here. It didn't tap it the first time here. Very small. If I was to draw this correctly, you can see there's a very small space there inbound. It's hard to catch that with the naked eye unless you really blow it up. But this was the actual when it tapped back here. So it came here, rejected, and came back into the zone. When they came back into the zone, they targeted a 24 range supply zone. So we're looking for the zone within a zone. Mark up the higher base zone first based on what we see when the market is, breaking structure. So we're looking for breaking structure lower, a supply zone off the higher base first. Then we can move down to the lower base chart and wait for it to patiently pull back to hopefully there's a zone on the inside of this higher base 120 zone in which we can mark up a 24 range zone and look for an opportunity to go short. Now this is where the market came back. This is on the 24 range now. This is where it's retracing back, as you see right here. I'm sorry, right here. Down here at 21,430. Let me make sure I got that right on this chart. No, not there. Sorry. Right here. 21,430. Right here at 5 o'clock in the morning. That's where it started retracing back to the upside. Now, here's the thing. It taps into the higher base 120 range supply zone right here around 10 o'clock flat. Now, there's news there, okay? But we're just thinking, in most situations, if we didn't have news, would this be a solid zone to trade from? 100% yes, okay? It was why? Because we got a lot of selling that came out of this area here. Aggressive selling to the downside right here. Massive selling followed up with a nice pullback to this area right here, okay, on the supply zone. So it's definitely an area which I would take interest in looking for an opportunity to take a trade. Now, when we are approaching this area, okay, at this point we're bearish, but then we start to break structure back to the upsides, okay? This is where things kind of get a little bit tricky because we're breaking structure or breaking structure back to the upside. We're taking out areas, like right here is a minor area structure right here, breaking higher, and we pull back, and then when we break into the zone, finally, or tap into the zone, we done broke above this area here. So we broke, several areas of structure pushing back to the upside. So the market actually kind of transcends or transitions from a bearish standpoint back to a bullish standpoint. But this is still a valid supply zone because the amount of aggressive selling coming out of the area, and it is a breaking structure. It will be counter trend, mostly too because of it turning back around and re-breaking structure. This is this is a major high resting up here. So these swings in between will be minor areas of structure as the market is breaking back to the upside. So if the market is breaking above minor areas of structure, say for example, back to the upside, okay, then to where it's, made a reversal pretty much to where it's pushed up, broke structure to the left, and then breaking structure, to the right hand side till we get a reversal pattern. I talk about that a lot here on the channel. Then we shift from a bearish to a more bullish standpoint, okay, even as we're breaking structure, minor areas of structure higher. Now this is a major high here, and this is a major low right here. So I tell a lot of people if they have a hard time trading, in between a leg where there's minor areas of structure, then wait for the major area to be broken. So this would be when it pushes up here, your major area of structure being broken. And maybe if it comes back to this point right here at some point, if it does, then you can look to take a trade, maybe going long if it comes back here, because this is aggressive buying and this is a demand zone, okay? But paying attention at the supply zone right here. Let's move down back to the lower base chart. As we can see, as it retraced back here, I'm gonna blow this up for you. It finally taps into the zone right here, the higher base 120 zone. Now the 24 range zone, which is that smaller zone that we're looking for, because we're looking for confluence. Mark up the higher base and then mark up our lower base chart. So if I blow this up for you, you'll be able to see here a small supply zone on the 24 range. The smaller zone is the zone we're marking up now on the 24 range. So once the market taps into our higher base zone, we're moving down to the lower base zone, or lower base chart, not zone, lower base chart, to find a lower base supply zone that we can mark up on the 24 range that's inside of the 120 range. So right here, high probability supply zone. Why? We had to push up. If you look at structure on the 24 range, push up, pull back, broke structure here. It's higher, just to come back down here and do what? Break below this low right here. So this is a high, this is a low. Another high to the upside, comes back, it breaks below this area structure right here to the downside off this little swing coming down off this supply area, okay? So there we have a multi-chart confluence, meaning a high probability zone on the 120 and a high probability zone on the 24. And as you can see, the market reacts at it and pushes to the downside. Okay, simply put, that's all we're doing is looking for rejection when we have confluence on at zones. Same thing right here. Let me show you another setup right quick. That was supply. This is another supply zone here. I saw 1 or 2 people take this trade over on the Discord today. And let me stop right now and say, if you're interested in joining the Discord, it is free. The link is down in the description portion of the video for anyone that's interested in joining. If you want like more trade insight, meaning trade breakdowns, you'll find on the Discord where I post trade entries, okay? And what I'll do is I'll go back and I'll break those trades down because it provides a full-on, insight of the reason why I took those trades, okay? Surrounding market structure, supply and demand, all this. So I bring that all together for anyone who wants to become an elite channel supporter. It's only $6.99. If you want to become one, the link is down below, right below the Discord link, okay? It's helped lots of people out. Why? Because I break down these trades in detail so that you can understand and grasp the setup so you can look for those same similar type setups. Talking about stop loss placement, talking about profit target areas, also talking about, market structure as well. So giving you the full on insight of my mindset of what I was thinking when I was taking these or looking for these trade opportunities, okay? So hopefully that makes sense. So again, the link is down below, but you also get the video playlist and you get the great video that I covered on market structure. So the link is down below. Once you click on that link that says Elite Channel Supporter, make sure to choose the second tier for $6.99. Yes, that's all it is. $6.99 for a month. That's all it is, okay? Lots of you probably spend that or more on a price of a cup of coffee today, daily. So maybe you're spending $50, $60, $70 on coffee, stopping somewhere, whatever the case is, or on that famous, breakfast sandwich or lunch sandwich that you like to eat, or salad or whatever is your, your food of choice throughout the day. We're talking about something that could be game changing. So that's up to you, make that choice. But anyways, the link is down below for anyone that's interested. But outside of that, the market came down here once it reacted off the zone here. It broke structure below this area here. So we got a structural break below this area here at 21,533. Okay, right here. So it left, as you can see, there's a supply zone resting right there with a imbalance attached to it back at the zone, or back at the zone, which the market never filled in until it came back right here. So another supply area here. Okay, so it rejected here, what we said, broke structure coming down. So this is a minor structure break right here. This is a major low right here, but this is a minor structure break. It breaks that, comes back, taps the supply zone here. We'll look at that setup right quick as well. So if we go over here, that larger box right here is the supply zone that I just showed you on the 120 right here. Now, pay attention because this is where it breaks, where it pulls back right here. This is the pullback right here. And if we look inside of the zone here, the larger box, what do we see? We see we see a lower base 24 range zone where the market made a lower high, aggressive selling to the downside coming off of this area here. So we look for an area where the market, where the aggressive selling took place on the inside of that zone on the 24 range right here. So not only isn't the market tapping into the 120 range zone now, but it also tapped into a smaller zone on the inside of the 120 range zone, which is that 24 range supply zone. Okay, it taps into it, wait for the break of candle or close of the candle, and go short to the downside. Okay, that's the way I do it. All right, and as you can see on the higher base chart, here's the setup where it taps into the zone right here, and it gave you right here. I'm sorry, right here where it tapped into the zone right here, and it gave you a nice entry on the 24 range. So that's all I do is looking for multi-chart confluence on both charts. Okay. Again, that's it, guys. I just wanted to share this with you today, and maybe this will help anyone out there who is, trading with or has $1,000 at least, and is interested in trading the micros. Just scalping for $100 a day. I wouldn't risk, me personally, I wouldn't risk more than maybe 5% of my account. But at a max of 10%. Okay, so because then you're like on $1,000 account, you're risking $100, and on $1,000 account, if you're taking hits of $100 each time and take, say a loss. It won't take much for you to blow $1,000, okay? But that's what I'm saying, that to learn and understand market structure first and foremost, so that you can grasp an understanding of the market movements before you start, moving into trading the actual strategy itself. But yes, you can do so with $1,000 and watch it grow, monthly. So say first month, you put in 1,000. At the end of the month, you've got a total of 3,000 now. You do the same thing next month, then you went from 3,000 to 6,000. And, by the time you know it, you can actually start building an account, and you can stay with trading the micro futures, or you can move over and start trading the bigger markets like the E-mini futures, okay? Not the micro E-mini, but the full-on E-minis, okay? Where the tick size or value is actually higher. Say on the NASDAQ, instead of 50 cents a tick, it's $5 a tick, okay? Or on the ES, instead of $1.25 a tick, it's $12.50 a tick. So you can start maximizing and making more. But you want to make sure you understand the correct way of how to trade. But outside of that, that's all I wanted to do was show you the supply and demand strategy and how I actually trade it. What I look for in reference to market structures, marking up and looking for, aggressive areas of buying and selling. Just give you the full-on rundown how I do it on a daily basis, and so many of our community members do the same. So if you're interested in joining the Discord, the link is down in the description portion of the video. As well, as I said, if you want to become an elite channel supporter, only for $6.99 a month, you basically support my efforts as not only a content creator but a trader as well, and in return I'm giving back some valuable content within a private community for those that are interested. But outside of that, that's all I have, guys. If you're not a current subscriber, please take the time to go ahead, click the sub button now to subscribe to the channel. Make sure to turn your post notifications on by clicking the bell, and last but not least, do me the biggest favor right now. Go ahead and click that like button if you found some value in today's video. If it opened up and helped you a little bit, gave you some insight, a little glimmer of light that shined, or maybe you had that slight aha moment to where things really started clicking for you, click the like button right now. I appreciate it. That's that thumbs up button. I appreciate it, guys. I'll see everyone in the next one. Take care.